If you are a student now, fast forward your life 10 years in the future. You have a car and money which gives you financial freedom. You are on your way home from work, being the busy CFO of a renowned organization. Every night, while you drive home, you buy dinner and run some errands if needed. But today, you must choose whether to buy food, pick the suit from the laundry, or get home early so that you can call the customer support to fix your broadband. All these tasks carry risk of other tasks not being done. If you don't pick up the suit, you will end up stinking at the next day's board of directors meeting. If you don't pick up the dinner, you will go to bed hungry. If you don't fix the broadband, you will not be able to mail the documents required for the board of directors meeting tomorrow. The tasks are opportunity cost to each other and carry risk. This is how life is. So is finance. It carries risk in every investment. In this video, we will learn about the risks associated with the financial activities and how they make people lose money. Financial risk is a term that can apply to business, government entities, the financial market, and the individual who simply just put money in the bank to save. For a particular investment, risk can be incurred by governments, corporations, individuals, or financial market. For any government, risk of defaulting on bonds or failure to control the monetary policy incurs the risk of losing capital. Let's assume that the government has issued bonds to raise the capital to build multi-storied car park. Unfortunately, an earthquake has destroyed the settlement after a year of its foundation. The government will lose some earning against the car parking charge and might default on the bonds that were getting paid off by the earnings of the car park. For corporations, they also can easily default on bonds or might not be solvent to pay the dividend to the shareholders. Corporations can get bankrupt for corruption or their product might fail to earn profit. In many ways, any financial activity related with the corporations possesses huge risk. Individuals incur risk from investments, usually bad investment which are done by individuals with very less knowledge incur the greatest risk. Financial markets also incur risks. Macroeconomic factors like change in market interest rates, default by corporations are the risks that financial markets must consider. Let's move on to the category of financial risks. Every financial activity, whether it is saving or investing, have their own rate of returns and risks of losing the capital. In a broad concept, risks are usually divided onto two parts: systematic risk and unsystematic risk. Systematic risk implies to the whole market or economy. Macroeconomic factors, political factors can affect the whole market. Usually, systematic risk cannot be mitigated easily. Diversifying won't help in this case as well. If we look at the recession of 2008, we can understand the gravity of systematic risk. The housing market of US crashed in 2008 and that acted as a chain effect that affected the whole economy of the world. Let's make it a discussion of another video. Whereas unsystematic risk is quite specific, pertains to one industry, company, or a particular investment. It can be controlled, calculated, and investments can be diversified to minimize this kind of risk. Unsystematic risks include change in management, a product recall, a regulatory change that could dive down the company's sales, and a new competitor in the marketplace with the potential to take away the market share from a company, and many more. Now, let's dial it down a bit and look at the specific risks that haunt the investors on a daily basis. First, let's look at the business risk. The basic idea of a business is to gain profit after meeting all the expenses. Expenses include salaries, production costs, facility rent, office and administrative expenses, and many more. A business tries to generate revenue to surpass all these expenses that can earn a profit. Business risk implies the viability of the plan to generate the revenue. It is influenced by the cost of the product, profit margin, competition in the market, and other things. There is another kind of risk called the credit risk or default risk. It's the risk of not getting by the borrower of a loan. Those who invest on bonds are subjected to this risk. Another type of risk is the country risk. It's when a country fails to pay off its debts. It can harm the whole economy of a country. Recently, we have seen that China is taking control over some ports that are geographically situated on other countries like Zambia, Sri Lanka, because they couldn't pay off the loan borrowed from China. When exchanging in foreign exchanges, risk is also there. Say, if US citizen invests in an instrument that is being traded in the English market, the investor holds the risk of losing money even if the instrument's value increases. The investor might lose money if the value of the pound decreases in relation with the US dollar value. This type of risk is called foreign exchange risk or exchange rate risk. The next risk is interest rate risk. If the market interest rate changes, the value of a investment will change as well. Let's assume that an investor bought a bond at 10% interest rate for 5 years. After 1 year, the market rate drops to 7%. Thus, the value of the bond gets decreased. And if the investor wants to sell the bond, he will face loss. Political risk comes from political instability, change on government, legislative bodies, etc. This is also known as geopolitical risk. Let's become an investor for a moment and think. In an investor's viewpoint, there are many things to consider before investing. Generally, it is believed that the higher the risk, the more the return, but it is not guaranteed. Investments is something that cannot be guaranteed. That is why all these risks exist. Investors need to consider all the risk and the return trade-off. How much are they willing to risk availing the return? And when you will be done becoming the CFO and will be in a car returning home, you will find out that it is easy to choose whether to buy food or fix the internet rather than calculating the risk for your company and join the investing game.
Well, that sums up our discussion about risks. We hope that it was informative. Don't forget to like, share and subscribe. and most importantly, stay tuned for our next video.